Middle-class Americans cannot afford to purchase a new car anymore. I made a video on this last week because the ex-CEO of Ford came out and said that if you're not making $100,000 a year anymore, you can't afford a new car. Well, one of the things that I also said is that just because somebody can't afford something doesn't mean they're not going to buy it. That's one of the reasons why 1 out of the 5 car payments in America today are over $1,000 a month. Well, just a couple of days ago, we got some new data on middle-class Americans and the car market showing how middle-class Americans are getting squeezed in this economy through the car market. What it said is that Americans are now holding on to their cars for the longest period ever. It's a new record. How long are Americans keeping their cars now? 12.6 years on average because they cannot afford to go out and get a new car. Now, the interesting thing about this is we've been seeing a big run up in car prices up until, well, pretty much 2024. We've seen a little bit of a price decrease in car prices. It's not anything super significant in new cars. Used car prices have seen a bigger drop, but cars are still very expensive. Now, what we've seen also happen over the last 4 years is that car prices have grown by around 29% according to the inflation data, while incomes have only grown around 20% according to the wage data. What does that mean? If you look at the data, car prices have grown a lot faster than incomes. But the real car price growth is many times a lot higher than that, because one of the things that I also talked about is that if you look at some cars, like if you look to buy a new Ram truck today, it's going to cost you almost double what it did just 4 or 5 years ago. And this is where I wanted to cover two things. Number one is I want to go over how the middle class is getting squeezed in America today, especially given the new data that we have in the car market. And number two is what you can do to not get squeezed in this economy, because I think that's really what the important part is there's a lot of stuff happening in the economy, but what can you do to really build your wealth despite the craziness? Because the reality is it's not going to get easier in 2025. It's not going to get easier in 2026. I don't care who becomes the president. You got to start really taking care of yourself because it's going to get more difficult. So let me jump right in and start by talking about what's going on with the middle class getting squeezed, particularly in the car market. Because like I just said, 1 out of 5 or nearly 1 out of 5 car payments in America are now costing over $1,000 a month. And we talked about this in market briefs, where it's not just the car payment that's more expensive. We also have car insurance rates, which are growing at the fastest rate in nearly 5 decades. In addition to that, your maintenance costs to keep up with the car are more expensive. In addition with that, gas prices are also a whole lot higher. So now when you couple all these things together, that means that owning a car, whether it's new or used, is expensive. And when you couple that with all of your other expenses, higher grocery costs, higher housing costs, higher vacation costs, it is very difficult for the average American today to continue being able to put money aside to save, to put money aside to invest, let alone go out and buy a new car. Now, we covered this in Market Briefs. Market Briefs, for those of you who don't know, is my free financial newsletter where every day my team is breaking down what's happening in things like the economy, stocks, crypto, the global economy, and housing. If you haven't joined Market Briefs yet, it's free. I got the link for you down in the description below. We're going to go to briefs.co/market. But this is where what I want you to understand is there's a big divide that has been happening right now and really accelerated after 2020 between the financially educated and those who are not. And what I mean by that is over the last 4 years particularly, we have seen wages grow. The average person is making more money today than they were 4 or 5 years ago. But for the average person, wages did not grow fast enough to keep up with inflation. But even if we assume that your wages grew just fast enough to keep up with inflation, what we've also seen is that wealth for investors and the financially educated grew significantly faster than incomes. Over the last 4 or 5 years, we've seen the S&P 500 grow by around 80%, while wages have only grown around 20%. Now, this is not anything new, but it really got divided over the last 4 or 5 years because of this new inflation that really popped up after the pandemic. Because remember, inflation disproportionately hurts some while benefiting others. Who does it hurt? The financially uneducated. Who does it benefit? The financially educated. What I mean by that? Inflation makes consumption more expensive. That means, in simple English, it's more expensive for you to buy groceries. It's more expensive for you to buy Chipotle. It's more expensive for you to buy a home. That's what inflation is. And so now, who does that hurt? It hurts everybody. Anybody who's got to go out to eat, anybody who wears clothes, anybody who drives a car, it's more expensive. You need more dollars to go out and purchase these things. So if you're buying things, inflation hurts you. But it benefits the financially educated because inflation also benefits asset prices. What have we seen happen over those same last 4 or 5 years? Stock prices boomed, real estate prices boomed. Who does that benefit? Well, it benefits the asset owners. If you own a home and your home price went up, that's good because now your home value went up. Now, of course, you don't actually make any money until you sell, but it's the same thing with stock owners. Who does it benefit? If stock prices go up, that benefits people that own stocks. It doesn't benefit people that don't own stocks because now that means it's more expensive for you to go out and start investing in these assets. And so this is where we've seen a much larger divide over the last few years between the financially educated and the non-financially educated because of what we saw happen with inflation. And this is where now I want you to understand, what does this mean for you and how can you still win in this system where the middle class is getting screwed, essentially. I was going to say squeezed, but the word screwed came out of my mouth. What do you do in this situation? And this is where you really have to decide what's important to you. I was reading a book by Damon John today, his newer book, and one of the things that he said in this book, which I thought that was really interesting, is sometimes success can be binary with what you want. And what that means is if you want to make more money in your business, work harder in your business. If you want to have a better family life, spend more time with your family. If you want to have more money, spend more time, spend over your energy doing that thing. And this is where if you are struggling with money, if you're in a situation where you're not happy with where you are financially, you're going to have to devote more energy, that's more time, more money, more attention into that thing, which is how can I fix my financial situation, whether it's working to earn more or spend less. Because the reality is, financially, things are not going to just get magically easier. Remember, we're not trying to see deflation in this country. The Federal Reserve Bank is working for disinflation. Disinflation is different than deflation. Disinflation is what the Federal Reserve Bank wants, which is that they want inflation to fall to 2% a year. That means that they want the price of things to continue rising, just not as fast as they were before. Now, we're still quite a bit of a way from 2%, but you got to remember that goal. The goal for the Central Bank of the United States is for 2% inflation. Not 0% inflation, not negative inflation, 2% inflation. Now, why does that matter? Because if the goal is 2% inflation, remember, who does inflation benefit? Who does inflation hurt? Inflation benefits those who are financially educated, and it hurts those who are not. So this system that we're in, this economic system that we live in today is designed to benefit the financially educated, which means if you want to win in this system, you got to learn to be financially educated, because what we're taught in school is we're taught to be a consumer and we're taught to be an earner. We're not taught to be an investor. Now, there's nothing wrong to work a job. There's nothing wrong with that. But now when you earn the money, the question is what you do with it, because what are we taught to do when we make money? We're taught to spend. And that's great for our system, because when you spend money, Chipotle makes money. When you spend money, Gucci makes money. When you spend money, Amazon makes money. It is great when you spend money in the economy. It keeps the economy moving. It allows these companies to continue paying their employees. But right now, the first thing you got to do is, before you worry about them getting rich, is you got to figure out how you can make yourself rich. And the simplest way for you to do that is to stop letting so much money leave your bank account. Because what ends up happening to so many people is, if you're 35 years old today and you've been working for 10 years, hypothetically, and you made $50,000 a year for those last 10 years, you have earned $500,000 in the last 10 years. But most people have nothing to show for it. You're working to earn money, but you have nothing to show for it. Maybe you have a nice watch. Maybe you got a nice car. Maybe you have an okay apartment, but you really have no wealth to show for it. And so if you're working for money, now the question is, how can you keep that money for yourself? And the first thing is, you got to save a little bit of money, okay? You have to have some cash to protect you against an emergency, because we know emergencies happen. Sometimes companies shut down. Sometimes people get laid off. Sometimes kids break their arms. Sometimes people get sick. Sometimes cars break down. You got to have some cash to fall back on. That way you don't have to go into credit card debt. Then you want to pay off your credit card debt, because that debt is skinning you alive financially. Then once you kind of lay that foundation, you have a little bit of cash, you don't got the credit card debt anymore. Now it's all about, how can you grow? How can you let your money also make you money? This is where all wealthy people are putting their focus. Their focus is not, how can I make more money? How can I make a bigger salary? How can I get a raise? Their focus is, how can I let my money make me more money? Because, see, what the average person does, what the average broke person is trying to focus on is, how can I make more money so I can drive a nicer car? How can I make more money so I can go on another vacation? How can I make more money so I can buy my Rolex? That's what the average person is doing. And that's why the average person stays broke. They might earn millions of dollars in their lifetime. Even if you make just $50,000 a year, you're going to make millions of dollars in your lifetime. But most people will have nothing to show for it, no real wealth to show for it. And this is where, if you want to have that wealth, you got to start doing things differently with your money. And that means first keeping the money, not letting it go out to the other people. And then when you keep it, where do you take this money? Now, we're talking about cars in this video. And a lot of people have kind of this big debate on the internet as to how important a nice car is. Because I started off in the real estate space. When I was in college, I became a licensed real estate salesperson. And all the trainers, the real estate salespeople trainers would tell you that you got to go out, invest in the way you look, right? Get a nice suit, get a nice car so you look successful. I didn't want to do that. Well, I wanted to do that. I should take that back. I really wanted the BMW, but I didn't because I realized what that was going to cost. Because on the other end, you got to make some money. And that car, especially if I have a car payment, you're paying interest on a thing that has a limited lifespan. Your car can only run for a certain number of years or a certain number of miles. And on top of that, that car is losing value. As soon as you put your keys in the ignition, that car is going to lose value. There's nothing wrong with wanting a BMW, wanting a Mercedes, wanting a Rolls Royce, but I want you to afford it first, meaning I want you to be able to buy the car with cash first. And that's going to require you to make some sacrifices today as to what car you drive, where you spend your money, where you're going on vacations. Because if your goal right now is to stop getting screwed over in this system, you can't keep letting yourself get screwed over, right? It's easy to point fingers. The Federal Reserve Bank is screwing us over. It's inflation that's screwing people over. It's big corporations screwing people over. It's the government that's screwing people over. But at the end of the day, all that blame doesn't help you. I want you to help you. And if you want to help you, that means you got to stop letting other people have your money. Keep that money for yourself. And now you got to start investing that money in yourself. Now that might mean investing your time to watch YouTube videos. That might mean buying books. That might mean buying classes. Or that might mean actually going out and using your money. Whether that's buying stocks, whether that's buying real estate, or whether that's investing in your own business. But I do want you to remember this. Because obviously there are worries in our economy, which is not new. People are worried about inflation, they're worried about a recession, they're worried about interest rates. And so people are worried that, hey, Jaspreet, the stock market is at an all-time high. What happens if it crashes tomorrow? And what I want you to understand is that we are going to see another recession. I will guarantee you that. But nobody knows when. See, we've seen a recession in our economy every decade for the last century. Period. We know that recessions happen. They are a part of our economic system. Nobody can predict when. Yes, there are red flags in our economy. I am not discrediting that at all. You got to understand there are red flags there. But if you want to build wealth, you have to be ready to invest, know how to invest, and then be willing to invest when you see the right opportunity. Now, the question is, when do you see the right opportunity? And that's going to depend on your strategy. Because your strategy might be very different than mine. Because for me, I have a couple different strategies in the stock market. I have a different strategy in the real estate market. I have a different strategy when I invest in startups. When I invest in stocks, my strategy is I'm investing money every single week. This is a passive strategy where I have a portfolio of ETFs every Wednesday, whether the market's up, whether the market's down, whether the market's sideways, whether it's raining outside, money is invested no matter what. That's one of my strategies. I have another strategy in the stock market where I have money that goes into a bank account that's waiting to be invested. Now, when I see a market crash, when I see a good company crash, I'm analyzing these individual companies now. I have cash to go out and invest. It's a different strategy where now I'm looking for a good company. And when I see a good company come to a good price, whether it's because of something happening in the economy or whether it's because something's happening to the company, that's cash that I have to go out and invest. And this is why I keep saying that if you want to be able to build wealth, you have to do two things. Number one is you have to be prepared. And number two, you have to be financially educated. Prepared means you have to have the cash. And that comes with understanding how to use your money. How do you save some money? How do you pay down your high interest debts? How do you put aside some cash that way you can invest? And then how do you now use that money, which is the financial education? See, the financial education is how do you come up with a system on how to invest? How do you invest based off of your goals? How do you now figure out what's a good investment versus a bad investment? Because my goals are going to be different than yours. I like investing for cash flow. That's one of the reasons why I like investing in real estate, because I like the cash flow. I like investing in the properties that are going to then pay me every single month. I like investing in ETFs that are going to pay me every quarter. I then like taking the dividend and reinvesting the dividend. I then like using more money to buy more dividends every single week. Because now that's something that I can understand, and that's something that I want to invest in. So what you got to do now is understand this is what's happening in our system right now. We know that the middle class is getting squeezed. I said screwed earlier, call it whatever you want. The middle class is getting screwed and squeezed. And this is not a new phenomena. This has been happening for decades. It's also not going to stop. It's going to continue happening. And so now, if you understand that, then the next thing is, what do you do to protect yourself? Right? Cars are just one part of this equation. It's a big part because people are very emotionally attached to their cars, and cars are a big purchase. I mean, it's usually the second biggest purchase that people make besides the place that you live. So cars are this emotional thing, and they're keeping, unfortunately, a lot of people broke. A lot of people broke. And this is where now, if you want to stop being broke, if you want to stop being the middle class that's getting squeezed, and you want to start being part of the financially educated that's winning, understand now, what can you control, right? We can't control what the Federal Reserve Bank does. We can't control what the government does. We can't control what corporations do, but we can control what we do with our money. So now, you got to start deciding, what do you do with your money? What car do you drive? Where do you live? What clothes are you wearing? What vacations are you going on? How are you spending your money? Now, if you can start keeping more money for yourself, now you can start deciding, what do I do with this money, right? It's a process. It doesn't happen overnight. I call it a decade of sacrifice because it takes time to start putting in the work, to spend less, to earn more, to learn how to invest, to start putting your money to work, and then start seeing the impacts. Because what happens for most people is you start investing. Maybe you put in $100, you put in $1,000, you put in $5,000. You're not going to see really anything crazy happen out of that. But if you keep consistently investing, month after month after month, year after year after year, eventually you're going to start to see some progress. Because now it's not just you putting more money in, it's also your money working to grow. Because guess what? Markets go like this. Sometimes markets go up, sometimes they go down. Sometimes they go up big, sometimes they go down big. But you got to keep knowing your strategy and keep stacking your investments, because your goal should be to invest for the long term. Not 3 months, not 6 months, but years, if you really want to see the big growth and understanding. Look, this is what's happening in the system. People are getting screwed over. People didn't learn about money. But now it's up to you to make a change. That way you can be the first one in your family, or maybe the second one or the third one, doesn't matter, but you can be the one in your family to build the real wealth. That way you can start really creating a different life for you and your family.